Setting Australia's 2035 emissions target is a daring tightrope act. The Albanese government's ambitious climate policy vision has already gained momentum, with a successful first term and a landslide election win, in part due to climate and energy reforms. Yet this task comes with a steep challenge, a narrow corridor between progress and peril. The Climate Change Authority's draft proposal calls for a 65 to 75% emissions cut by 2035. https://2035 emissions reduction targets. UTM source Myra News, and Medium Myra News, and Campaign News. But the path to this goal is fraught with division. Environment groups push for the upper end of the range, while some business leaders oppose it, fearing economic disruption. Even a 65% reduction would mean having Australia's current emissions, which are already 28% below 2005 levels. This is ongoing as the days of the citizens set to experience ending emissions. The stakes are high, but now is not the time for hesitation. A monumental task lies ahead. Under the Paris Agreement, the 2035 target is set for September 2025. Australia's 2030 goal, 43% emissions reduction from 2005 levels, remains far from achieved. While the nation's emissions have fallen 1.4% last year, they've nearly returned to 2019 levels, showing cautious progress. A 60% plus target by 2035 would demand sweeping rapid cuts across sectors, but it's technically feasible and economically beneficial, as it could attract investment and position Australia for long-term success. The real test is follow-through. Will the government enforce stronger policies like a nationwide carbon price or expanded renewable incentives? While the carbon tax label has historically hindered such actions, a robust carbon price at a meaningful level could drive change. However, political resistance remains a barrier. Instead, a mix of sector-specific policies, such as emissions trading, regulation, and tax reforms, could create a coordinated approach. The Productivity Commission advocates for a consistent national strategy, guided by national carbon values that reflect the true cost of emissions. https://pc.gov.au/inquiries current-net-zero-interim-net-zero-pdf. UTM source Mira News, UTM Campaign News. These benchmarks would incentivize businesses to cut emissions, ensuring efficiency and alignment with global goals. The challenge lies in balancing ambition with practicality. A carbon price exceeding current market levels, around $30 to $40 per ton, would be necessary. But even then, the EU's €70 per ton price and Australia's $190 fuel excise rising underscore the gap. Infrastructure Australia estimates a carbon value of over $200 per ton for the 2030s, highlighting the urgency of scaling up. Clean energy transition faces hurdles. While coal plants are being phased out, progress in renewables and storage is slower than needed. The government's underwriting scheme addresses investor concerns about future power prices, but new projects face delays due to regulatory scrutiny. State and federal governments must abandon the status quo of slow, incremental regulation and adopt a faster, more adaptive approach. The tightrope between urgent action and political pushback is stark. Rebuilding the power grid as a national priority risks escalating electricity bills and infrastructure fears, while delaying action could leave industries vulnerable. For industry, the challenge is twofold: modernizing operations to reduce emissions or risking closures. The safeguard mechanism encourages credits for excess emissions, but low market prices fail to drive investment. Reform could involve tightening carbon credit rules, limiting industry's use of credits, or setting minimum prices to spur growth. Land use lags behind climate action. Forestry and agriculture offer vast opportunities, but the current carbon credit system is limited. Governments must take a more active role, including buying marginal lands for conservation, regulating land use more rigorously, and integrating biodiversity projects with carbon storage. Leaving farmers and rural communities behind risks economic instability. Transport reform is another crossroads. New vehicle standards, while weaker than desired, may help lower costs for EVs and smaller cars. But Australia needs a robust charging network, better public transit, and efficient rail. Carbon-neutral aviation fuels and a carbon levy on jet fuel are urgent. Mining and agricultural machinery must electrify, with fuel excises extended to cover all sectors. A road user charge could mark the beginning of a broader tax reform to fund infrastructure. The climate future hinges on decisiveness. If the 2035 target is met, it could become a widely accepted benchmark for ambition, spurring investment and economic transformation. However, failure risks squandering political momentum toward net zero. Amid fierce domestic debates, the government must act with clarity. Prioritizing long-term sustainability over short-term gains. Author Frank Giotso, professor at the Crawford School of Public Policy and director of the Centre for Climate and Energy Policy at the Australian National University. He advises state governments, including as a commissioner for the NSW Net Zero Commission and chair of the Queensland Clean Economy Expert Panel. His work spans policy analysis, carbon pricing, and climate economics. This article was originally published in The Conversation, theconversation.com, and republished under a Creative Commons license. Views expressed are the author's own and do not reflect those of PV Magazine. Content is protected by copyright. Contact editors at pv-magazine.com for reuse.